please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Halftime Report. Well, it's 12 noon. We're halfway through the trading session. It's a good time to run you through what's going on. I'm Nigel D'Souza and with me is Sumaira Abdi. Well, Sumaira, it's been a good start actually for us. We're clearly outperformers today. If you take a look at the rest of Asia, well, that was in a bit of a wobbly spot. In fact, the Shanghai market is down close to around 1%, but we are virtually at the high point of the day. And the headline index is doing very, very well. Well, we're seeing a tad bit of an underperformance coming in from the mid-caps though, because when you have the Nifty up close to around 0.8%, you have the mid-cap index that's more or less flattish. That's telling you we're seeing a relative underperformance in today's trade. Though the advanced decline ratio has now improved, still we have more number of stocks that are declining than advancing. So keep an eye out on those crisscross lines as well. Hey, Sumaira.
Hi, and that's not all, Nigel. The budget week has begun.
Ooh.
The budget session is underway. We have the economic survey that will be tabled today. And of course, at the end of the week on Thursday, we have the election budget. So a lot to factor in for the market this week.
Absolutely. So fasten your seatbelts. So the next few days could be quite volatile. We have kick-starting the February series, remember, today. This market, in fact, we're just moving higher. The headline index just continues to move higher as we speak. SBI is one stock, I think, that is spiking up. It was more or less flattish. Now it's sitting with a gain of around 0.5%. Good going. We're virtually up close to around 100 points as we speak. But the big focus really is going to be the economic survey. That will be tabled in Parliament today around noon. That's around now. Lata is here to tell us what can we expect. Lata.
In the first place, let me douse expectations because the survey is about the year that was. And in days before the internet and before data was available at our fingertips, it was an all-important document which prepared you for the budget. But right now, it cannot say too much of new stuff. What it can say new, of course, is the government's estimate of the next year's GVA or GDP. That will be the first official estimate we get from the chief economist of the government, and therefore the number is important. If they say 7 to 7.5 GVA and 4 to 4.5 inflation, we know what kind of a nominal GDP they'll work with. Again, it's possible that they will give us some idea of what the fiscal deficit priorities the government might have. If there is some kind of a prudence argument, then you must expect fiscal prudence. Though to be fair, in the past, the CEA has argued in the survey for more fiscal stimulus, and that stimulus didn't come in the budget. So we must very clearly remember this is the economist point of view, the expert point of view, and the government will take a political point of view, which could be different. But there is a wealth of detail, especially Dr. Subramanian has definitely raised the level of economic surveys. So we should expect a lot of detail on the GST impact. How much did we fall short on taxes because of the disruption? And therefore, any estimates that the chief economic advisor has on the rebound in taxes next year, one would watch very closely for that, both in terms of impact on the economy and in impact on tax collection. The expectation is that he would also, dwell a lot on rural focus because farm distress and protests of farmers is such a vocal point, such a visible issue in the past 12 months. As well, if there is any capex stimulus, will he give us some hint on smart cities or any such issue? We would look out for these hints.
All right, Lata, we're getting some source-based information to need rise. In fact, they are saying that they're likely to expect FY19 growth to be led by industrial revival. And we had a couple of numbers. I think for the next year, they're working with a number of FY18 manufacturing growth is expected at around 8%. I think I saw a couple of numbers in terms of GDP growth as well for the next year. They're likely to estimate FY18 growth at around 6.7%. This is some source-based information that's coming in there. And I think for FY19, the number they're working with is around 7 to around 7.5%.
Okay. Well, actually, since we have, I think, our economist, a panel of economists to give us an idea as to what they are expecting, Upasana Bharadwaj, the senior economist at Kotak Mahindra Bank, has already joined us, as Abik Barua, the economist from HDFC Bank. Good morning to both of you. We don't know when we are getting the report. The web page created for the purpose by the CEA's office says it could be close to 1 o'clock. So I'm just warning both of you. But anyway, we're getting these lines from Newsrise that FY19 GDP is likely growth, it says. So I don't know whether it's GDP or GVA, is likely to be forecast at 7 to 7.5. Abik, any thoughts on this?
No, I would broadly go with that kind of a range. They will not build in a spectacular recovery at this stage because it might not be too credible unless you have more concrete evidence coming in. There are clearly headwinds on the global front, and that's something I expect some discussion on, particularly on oil prices, the liquidity withdrawal, and so on. Domestically, the rural economy has been looking weak, and it deserves some specific attention. And without all this sort of panning out, I think it would be difficult to defend, say, anything over 7.5%, although it could just go up to 7.75, given a base effect. The only, I just want to make a sort of, on a lighter note, if you notice the special page created on the economic survey, is a shade of pink, is a very lurid shade of pink. I just hope it doesn't sort of reflect the bias of the chief economic advisor to the finance ministry, in which case we might have somewhat redistributionist.
Yeah, I take your point, but actually, to be fair to Arvind,
go ahead,
Dr. Arvind Subramanian, his last year's forecast, 6.75 to 7.5, was what he gave for the current year. He was actually more conservative than even the prevailing RBI forecast at that time, which was still standing at 7.1, after the December monetary policy. RBI stood higher. So I would be kinder to Dr. Subramanian's estimates. He's not tried to overestimate, at least in the year gone by, or rather the current year. I'm just
Certainly not. I think he is, go ahead. No, I think he sort of certainly is far more conservative than a lot of other forecasters, and the economic survey, to the extent that it reflects the forecast of the government, is very cautious and doesn't go overboard. And I think retaining the credibility of the numbers in the forecast is top of mind for Dr. Subramanian.
I'll come back to you to ask you what we should be looking out for in the survey. But before that, Upasana, good morning and thanks for joining us. What will you watch out for in the survey?
Yeah, again, Lata, as you pointed out, I think growth is the first variable that we would be looking at. Like you just mentioned, 7.5%. Probably they would go with a 75 basis of a spread, and hence a 7 to 7.75 is a range. I think the economic survey would go for looking at the possibility of a little upside to growth, bouncing back from maybe the lower segments, which are right now, which have been quite suppressed in the year FY18. So probably, some kind of a base effect impact, which they would want to account for, and hence a 75 basis of a spread, 7 to 7.75. That's one thing I would look forward to. And you also mentioned 6.7% for FY18, which probably 6.7 is what GDP estimate from CSO, which also we thought that they were a little conservative while they were giving the numbers. So probably they too have accounted for that kind of a upside to the FY18 number, and 6.7%, and hence probably a GVA of a 6.3 to 6.5% anywhere, that reading for FY18. So I think these are two levels that we would be probably looking at. Apart from that, of course, we would be looking at what are the pros and cons, or other cost and benefit analysis of a demonetization, because now we are done with one full year of demonetization. And since economic survey is clearly a stock taking of the year gone by, probably now is the time to evaluate fully in detail what have been the costs and the benefits, and what are the medium-term positives that can really come out of that initiative that was taken. So maybe we will get a detailed analysis of that there. And apart from that, of course, what is the guidance for fiscal policy or fiscal discipline? Given all the challenges that we're talking about. So GST and demonetization, the two issues, and hence the forward guidance on the fiscal side.
Okay. Yeah, point taken. We were discussing some such issues. If we have to wait up till 1 o'clock, that pink page, Abik, which you referred to, is now giving us a clock that it could be, 48 minutes more. For some time back, it was telling us that it could be maybe earlier, but now the clock says that it would take another 45 minutes. I mean, that's what it says. It's after all in Parliament, and we don't know whether it can come in even earlier. But the pink page says it could take 48 minutes. So just let me get one more comment from you. Really, how important is the economic survey? It's largely of the year that was. It's mostly the economists, the chief economic advisor's opinion, should the market really look for anything that will move the market, Abik?
No, I think it's important from many respects. One is that it does give you a very thorough analysis of some of the events that have taken place and how they're likely to sort of pan out going forward, having analyzed the events. For instance, if you take the discussion on the farm loan waiver, where they actually counterintuitively claimed that it was going to be deflationary, that was a huge insight. I mean, there is, of course, their sort of understanding of the global economic challenges ahead. There was a considerable discussion on oil prices, which unfortunately sort of went wrong in terms of the levels they forecasted. But it is a rich document. And the other thing is that I think one of the things that Dr. Subramaniam has brought in is this element of dissent. And I think in sort of policy circles and in economist circles, you need dissent. Otherwise, you might as well live in North Korea. And I think this, the alternative view that there is a narrative that can challenge the sort of the conservative narrative that informs most of the RBI's and government's decisions these days, I think is equally important. And you need not necessarily agree with it. You might want to, find fault with it, but you need to have a counterpoint, a counter-argument. Thirdly, I think it sort of gives you a very good, warning of the risks ahead on things like the fisc. For instance, in the last main survey, it wanted fiscal headroom and so on. But in volume 2, which was sort of the mid-year economic survey, it talked about state finances, how that was going awry because of farm loan waivers, because of a couple of other things, and effectively suggested that the fiscal headroom had been squeezed quite tightly. So from a number of perspectives, I think it should not be, clearly as you pointed out, it should not be sort of regarded as, if you like, a leading indicator of what's to come in the budget, except for a couple of broad macro numbers. Having said that, that does not diminish the importance of the discourse and the narrative within it, which is, rich in terms of analysis, which can be extrapolated forward and gives you a very good alternative perspective on things.
Oh, absolutely. I mean, I'm not at all decrying the importance of the document or the richness that Dr. Subramaniam has brought to that work. As you said, some excellent work that he did last time, especially on farm loan waiver, an idea which clearly was not the narrative at that time. My only point is, at the moment, the markets are at all-time highs, and it is unlikely, I guess, for the economic survey to have anything that will move the needle for markets. This is a rich document which people like Upasna, Abik and I and, others of their ilk will like to read, but immediately it's not something which should have the market moving either ways. We will watch out for the GDP number. Whatever the CEA says is very, very important, because it's a very learned and well-researched number, and his leanings on fiscal deficit also could be important. But in the past, when he has argued for stimulus, the stimulus did not come, and the budget went with fiscal discipline. So, I mean, I'm just putting that on the table. Abik, Upasna, I would request you all to stay on and monitor those websites, the pink page that the CEA's office has put up. As soon as we get some meaningful headlines, we will come back to you and discuss the economic survey. Back to you, Sumaira.
Thanks very much for that. In fact, as we speak, the markets continue to climb. So now at the high point of the day, the Sensex is added about 340 odd points right now. The Nifty is up about 0.8%. The mid-cap index, though, lagging behind today, just seeing some minor green over there. So we'll take a quick break, come back in a bit. Up next, we'll get you an exclusive chat with Brian Jacobson of Wells Fargo Asset Management on his wish list from the budget 2018.